Hey everyone, welcome to the market review. And this week we have a lot to talk about. I'll just get started. A lot's happened last week and a lot will happen in the next 2 weeks. So we begin. Now first we do the breadth check and making lower highs visible here uh, and here as well, similar to what we have before tops here as well or here. So not looking very good. Then on the other breadth side, which is this indicator is trying to cross over into negative. McLaren oscillator is very close to zero and not really going higher. This one lower high. And even though we had that 80 U vol and we had continuation as expected from last week, we didn't really show follow up with another high U vol day, which were like 60, 55, 60, both downside and upside and didn't really look very good. Then we had jobs data. Jobs data was good. It doesn't show anything of concern for the jobs market. Everything turned down as predicted by the other stuff here. And it was unemployment at 4.3. What's this green one? I forget. It's permanent job losers. So this is the only concerning one that is saying something negative about the jobs market. But other than that, we are still at stable and don't foresee a breakdown anytime soon. On the inflation side, we got a 2.4. This was higher than I expected. I thought we would get a bit of an undershoot of at least point to zero point 0.2, so like 2.2, but we didn't. We got exactly what the Fed nowcasting was predicting at 2.4, and I still think this is a cycle low, but it will be over 2 months. Like next month will still be 2.4, and after that we start going up on inflation, in my opinion. So this is the setup, and again, nothing really surprising from this. It's fine. No spike yet, but it's building up because we're bottoming. And then on the jobs market, nothing to be concerned about, even though there was some scare of uh, recession this week, and we saw yields pop, and we saw not go down. So yields went down. We saw um, the market kind of get a scare from the job revision numbers, and so on. Now, moving forward, things don't look good at all, in my opinion. Like we look like we're about to break down. SPY, we closed right at the ATR open. This is the close of the previous year, basically. So we closed below that. Then we have Qs, which is below that, has been below that for a while. And we closed, we got rejected by the yearly AV up combo, the ribbon, and the yearly open, and went down again near the short trigger. On the weekly, we have an inside wick, but a red one, and we close lower than the previous one. Basically, an inside wick relative to the whole candle. Like this is the open, this is the close, the high. No, this is the low, this is the high, and we closed within that range. This is why I'm saying it's an inside candle. And for SPY as well, IWM is still looking the strongest, which is not good from a healthy market, in my opinion, in this scenario. We need to see tech coming back up and being strong. Then we had the Cdance release, like the video AI model from China, which scared the market a bit. And we still have XLE. XLU started going up as predicted a while back. Staples and industrials and metals outperforming, which is generally not a good thing. I posted on Twitter some charts. Basically, this is SPY versus XLU, but when we add SPY to the chart, we see that this is generally not a good thing. Like we see it before major corrections. Sometimes it's a dud, like for example here, but more often than not, it's a real possibility that we get a correction afterwards. And again, not a single point, but versus XLP, the same thing. versus XLB, the same thing, versus XLE, the same thing. You don't want to see uh, energy rallying at the end of a cycle. Versus XLF, it's not showing anything. Basically, in my opinion, now SPY is basically all as SMH. Everything that's holding up SPY is basically semis, and we can see that it's very highly correlated with SMH here. Then we have even SPY versus TLT. You don't want to see this TLT improving versus SPY because it foreshadows a bigger correction. And also SPY versus MAGS, which is Magnificent 7 ETF, which again, you don't want to see Mag 7 lose steam, and we are seeing that as well. We're also seeing without SPY, just the Mag 7 ETF, uh, we lost horizontal support, and it's not looking good at all. Now, with a bit of a nuance, I want to talk about timing because timing is important. And because the market is not giving benefit of the doubt to anyone right now, I think this is the most dangerous time since the AI bubble started. And we are potentially looking at a very similar setup to what we had in March 2020 when all hell broke loose. Maybe we don't get a minus 45%, but maybe we can get a minus 15 in a very, very short amount of time. Minus 15, minus 20. And a combination of things are coming together to just keep hitting the market and just pushing us lower and lower. Now, next week, there is a rumor that DeepSeek V4 is going to launch next week during the Spring Festival. The Spring Festival is all of next week, basically. We had that, like I said, the other AI model from China with the videos releasing, and it was impressive and contesting the Western supremacy in AI, let's say. If this DeepSeek V4 does another moment like it did when the initial launch, again, we can see more Max 7 bleeding, and that's not good for the market. Then, on the other side, we have Trump plans to roll back some tariffs on steel and aluminum. And one of the performant ETFs of this year has been XLB. This will stop an XLB rally in its tracks. It'll probably stop an industrial rally in its tracks. And we don't need a lot for the other sectors to turn. I did like a summary of P's by sector, four P's basically, and some of these names are getting super overextended. Like XLE still seems fine, although it should be like at 15 to 20. CVX is way too ahead of itself, should be pulling back. Then we have on Staples, which has been the outperformer XLP and has rallied like crazy over the past month. We have Walmart and Costco at 45 and 49 4p. This is 4p. Uh, P is like 50 for both of them. And some of these names again are getting ahead of themselves. They should be like 15, 20. But these are the two biggest offenders. Like they are priced much higher than any of the Max 7 elements, and Max 7 is basically cheap versus them right now. Only Broadcom is a bit expensive, but other than that, everyone else except Tesla, which is a joke basically, is doing pretty okay. We have same with industrials. We have Caterpillar at 44 4p, G42, pretty fucking crazy. GV 55, D 36. So who's gonna buy all those fucking tractors if the American farmer is hurting badly because of tariffs and because China is not buying stuff? Who's gonna buy these tractors to justify the 36 4p? Same for Caterpillar with maybe this you can say this is an AI build up play or something like that, but it's still way too fucking overextended. And in materials, looking generally okay, but still a couple of names that are ahead of themselves and should be pulling back a bit. The only one that looks okayish is XLU. Again, NE is the biggest name in it, but and highest premium here basically, but still looking okay. So XLU might still be a safe haven sector even if the market goes down or at least drop less than the others. So why I bring this up is because a news like this, when it becomes reality, and most likely it is true, they denied it, but denial equals it's true for the Trump administration. When this becomes reality, it will hit materials pretty hard and basically shift the momentum to on the other side. And if one turns, the other will follow as well. Uh, then we have the so DeepSeek, we have the this here, then we have the war in Iran. Well, we know Trump sent another carrier to the region this week, but it's going to take, based on this is the source, and it's pretty legitimate source. It's gonna take them around 1.5 to 2 weeks. This was on February 14th to get to the region and be battle ready in that area. So most likely nothing will happen within the next week and a half. The window of opportunity is still post OPEX. So now all the combination of things. Let's mention it. So next week we have the tariff reduction on materials. Then we have the Gemini moment, which can be bad. Then we have OPEX. The expiration is here. Then we have OPEX on the 20th. And then we have this week. And in this week, we can have Iran war starting. And most likely it will start because there is no possible way they can reach a deal with Iran in which everyone is happy. The US will ask for too much, Iran won't give up that much, and then it's inevitable they will get to war. Then we have Nvidia earnings on the 25th, which, in my opinion, is going to be sell the news. The market, with all the burden and everything that's been happening in the past month and that is still to come in the next 2 weeks, in my opinion, will sell the news on Nvidia earnings. Nvidia is not looking very good either. Uh, like this type of price action is not bullish. Generally, it will give at a minimum a larger pullback to this AV up here, like to 160 something. That will be the minimum. But again, depending on the circumstances that trigger the move down, and depending on when the timing happens and what other things happen at the same time, this can go a lot lower. Like we could potentially go all the way here to like 120. So if we get like the kind of flash crash of 15-20% between February OPEX and March OPEX. So we are going into maximum possible weakness. I don't think the market can go higher, and the cap would be like a 700. But again, even that seems quite implausible to me. And in my opinion, we will potentially at max retest the yearly AVU up here, do basically what QSDOT did when it did this rally. This is the yearly AVU up, this is the yearly open. SPY, it is at the yearly open slightly below. But if you were to do another move up, because maybe we don't get the DeepSeek launch on Tuesday, maybe we get it on Wednesday or something, I don't know when it's going to come, and the market doesn't react to it or something like that, we still have another week or so of potential strength, or at the minimum strong enough to not to break down. But once we get past OPEX, all bets are off. Things look incredibly weak. I would not be going. I'm not going long in this market on anything basically. I'm just gonna wait and try to find an entry for puts. For SPY itself, I think this is the level of interest. Basically, we go to 690, we get rejected from here, and then I think we finally begin the big correction. And like I said, it's a very weak environment. Uh, had we converted on any of these other attempts to go lower, like I've been trying to say that we go to 650 for a while now, and we tried once bounce, we tried a second time bounce, we're trying a third time, maybe we bounce again. The longer we uh, postpone this correction that should have happened long time ago, but didn't, the more potential energy is built into the system. And when the move does come, it's going to be a lot stronger than anticipated. So because we haven't really been able to push it down and resolve it, when it does come, I don't think we stop at 650. My baseline target would be 630. Obviously, there are levels and levels around here, but just looking at the yearly here and looking at the pattern we had in 2020 on the April thing. So this was, I'm gonna turn on ATRs, but don't get, a lot of lines will appear here. This was like 1.61 ATR. So we got one ATR. So this was last year. And we opened here, oh no, this was last year. And similar to this one, we're going kind of sideways. We went above the green pivot, so we were stronger than this year. On this year, we didn't really get above the green level. We almost touched it, but we didn't go above it at all. So we are even weaker than that. And when we crossed below the yearly open again, we immediately crossed the short trigger and got to uh, the golden gate level, not golden gate, sorry, golden level, 1.61 fib, so no, 0.61 fib. And then eventually we broke down below. We broke below the 1 ATR and we went all the way to 1.61 ATR. If we do the same here, target will be this 5.5. Let me let me run some numbers. So we do this, we go up, we short, and then we go down, we go down, we go down. Basically, this is where we stop. So 634. Obviously, 650 can be a bit of consolidation and then go lower here, but would not be surprised to see something like this. And if we get another leg down, so this is the baseline. The baseline is we go down to this level, we consolidate here for a while between 630 and 650. And if we get a new leg down, this would be the result. If we do not get a new leg down, we start going up and maybe we make new highs on the market. Although, again, this seems implausible to me at the moment. Not that we don't go up, that we make new highs. In my opinion, we have already started a bear market, and this will be a long one. All the things that are happening with AI that potentially affect the jobs market, I think I initially believed that we would get hit by AI very severely in Q4, like late Q3, beginning of Q4. It would actually hit the jobs market in a very negative way. But I thought the market would shrug it off for a while longer. Like I thought it would be like a May, April, June, no, May, June, July kind of thing when the market finally figures out that AI will hit the jobs market like a train. But it seems that the market is already figuring it out and it's going to begin pricing in the negative effects from AI on the jobs market. And this is why I think we are basically going into a bear market. And we are already in one, just like in the first or second month, something like this. And if we are in a bear market, the second leg down will be coming. It's not basically a shorty. Maybe we have some sort of big bear market rally that makes a lower high, like it won't make a new high. This is why I say I don't think the market will make a new high. It's not that we don't bounce, but most likely with this bounce, it's just going to be a bear market rally. We go back to the yearly open, get rejected, do something like this, and ultimately continue going down. So given what's happening in the real world and how things have developed, it's looking extremely bearish to me. And from this level, how much is it? This is like 20%. This will be like a flash crash kind of thing that we see. And to 630, it's only 6% from the current level. So again, not a lot to drop to get here. And the base scenario is more or less this one in which we do get a second leg down. It will depend what happens. Potentially, if it's a flash crash scenario, we could get this in like COVID, like within the February to March OPEX window. And we just do this. What's this? This is basically the playoff. This is closer to a March OPEX. March OPEX would be here, I think, 20th. Basically, this is March OPEX. So if we get like a flash crash scenario like we did in 2020, it's like I said, it's not going to be 35%. I don't think we are there yet, but it could be 20%, and this is basically 20% going to the 1.6 ATR level uh, on the yearly ATRs. So pretty scary stuff. Short term, like I said, I think we can get a bounce and go to the yearly AV up and get rejected on SPY. I think next week is going to depend a lot on uh, DeepSeek. How the market reacts to DeepSeek is going to define it. If the market reacts negatively, we don't have to wait for OPEX to drill. If we do wait for OPEX and go up, I think the party starts post OPEX. Um Nvidia earnings plus Iran plus some other shit that can appear. I think it's gonna look good enough to push us down and push us down in a very negative way. And I really don't see how the market can justify a narrative of going up. Um, I try to I try to figure it out. Usually, it's pretty easy to find a bullish way for things to resolve, but this time it's different. I really, really, really don't see it. Um and just to justify buying the dip, prices have to go lower. When we look at Fang, they all look kind of like shit. Tesla, again, Tesla is at 204 PE. Like you don't need a reason to sell Tesla. You have to be fucking crazy to own Tesla in this market. I think. Then Apple got rejected here, went drilling. Nvidia talked about it. This is not a healthy look for Nvidia, and I think it can go lower. Google, in spite of the earnings, in spite of everything, it went below all moving averages. Could get a bounce next week and retest the ribbon, like do this. Basically, the ribbon will do this, and can do something like this, get rejected, and then start a new leg down. Amazon looks pretty bad as well. Again, may have a reason to bounce here in 194.96. We fill this gap here and could get a bounce, but don't think it's going to be very strong. Maybe like 205, something like this. Microsoft, did it fill this gap? It did. Again, might do this, might get rejected by the ribbon again and go even lower. Even Meta looks pretty bad, like back below this AView up. One is the same, I think. Yeah. Netflix drilling can even get a bounce, like this was a very feeble bounce attempt and got rejected instantly. I think this one is going to 70 at a minimum. Broadcom bounce from earnings, but again, back below the ribbon, discount as a rejection. Should be going down to this area here. Most likely we will go below this AView up and so on. Palantir is shit. MicroStrategy is crypto, so doesn't really matter that much, but I would expect this bounce to get rejected again. It's not there quite yet. TSM had this ghost print on Thursday, and it's 10% lower, 12% lower than this, so quite an interesting moment to get a ghost print. 11.77% versus Friday's close. And Oracle is down, most likely will get rejected by the ribbon here and go. Even if it maybe bounces here, it would should do this and then make a bullish divergence here. It's something like this. So nothing looks good. Even stuff like commodities, like we have, let's talk Bitcoin first. So this one I don't think will play out like this. I'll delete it. What I would like to see for Bitcoin and what could possibly happen is a 21 EMA test. So we do this, and then we drill down and we test the lows. And this might actually, when we do this test here, might actually be the full-time low. It depends how the market drops and how much it drops, but this could be a low for crypto. Not that it will move higher anytime soon out of this range, but it's going to be a low here. We go higher again, we go lower, maybe then we go lower, or we bounce again and we go higher later. We shall see. Given that all the bearish positioning on MicroStrategy and coin was moved to April, it seems unlikely to me that we find a low before April. Then we look at silver. So what I want you to look at silver is that we are getting rejected by the ribbon, and we did a negative. So we went down, we bounced, rejected, rejected, went down, rejected, rejected. So we have crossed below the ribbon. The ribbon has turned negative for now, and we are constantly getting rejected by the ribbon. What should happen is another attempt to go higher, but then the material thing or tariffs maybe announces and kills sentiment, and then we realize there's no tomorrow. And the real support area for silver is 50. Until 50, I would not recommend longing this at all. And gold has looked a bit stronger. Uh, I would assume it follows in the same way, but obviously gold will be much stronger than silver in my opinion. Like just like we did here, like silver dropped 30% and gold dropped 12, 13, 12 on the low basis, while silver was at 32. I would expect this, even though it will drop, that it will not drop that much. So maybe get like a 55 EMA around 4700, but gold is still bullish for the longer term, and I think a buy point is around here, like 4700 would be a good buy point. Finally, let's do oil, which this, since if the war doesn't start this weekend, maybe Trump starts it down, I don't know. But if the war doesn't start this weekend, I would expect this continues going down a bit lower. Somewhere around 61 would be a good entry point. But this time I wouldn't choose oil stock. I would choose something like USO, because I want that this time I want direct exposure to oil prices. I do not want direct exposure to oil stocks this time. And if we get the war started, I would expect oil to blow up higher, but oil stocks might lag because of general market weakness if we do get that scenario to play out. So in this scenario, if we get like a pullback to 61-ish, I think oil is a long based on the macro setup, but I wouldn't do it through oil stock this time. Okay, so I think that's it for this week. Hopefully it helps you guys navigate stuff. Just a reminder, next week potentially bullish unless DeepSeek kills everything. After that, we get into the February-March OPEC cycle, and it is incredibly, incredibly dangerous. We could potentially get a flash crash in my opinion. We'll see how it plays out, but stay safe. Have a good one. Bye bye.